Hi everyone, welcome back to another ShareWise webinar. Today I am joined by the CEO of DigitalX, a familiar face here at ShareWise now. Thank you so much for joining me today, Lisa.
Thanks, Caitlin. Thanks for having me back.
No worries. So yeah, let's talk about the market currently. Um, for those that don't know, Bitcoin is on an absolute fabulous run. So Lisa, could you tell us a bit more about it? Maybe why now? And do we expect it to continue upwards?
Yeah, so why now? And then yes, we continue to see it trend upwards. And what we're talking about at DigitalX is testing all-time highs and then a rally beyond that. And then I think there's sort of obviously no one ever knows, but there's people with all sorts of charting that are trying to predict the number of days until the all-time high and things like that. So the reason I believe for the rally now is twofold. Firstly, a new dynamic in the market, which is the ETFs that have been issued. And those are proving to just have relentless demand. In the old days in stockbroking, we used to call it beware the thundering herd. And that's just relentless demand of about 12,700 Bitcoin per day through BlackRock, Fidelity. VanEck is making a big charge now, which is new demand coming in. The ARC product will sort of always have, I think, consistent demand for the niche that they hold in the market. And then that is the supply side of Bitcoin, other than overhangs, which we sort of called hangovers from things like FTX and Mt. Gox, and Celsius was the recent one. That hangover demand, that there's no hangover supply, I should say, that the natural supply of Bitcoin is only 778 odd Bitcoin a day mined. And then the second reason for the rally, which would have happened without this demand, is what we call the halving, which it's written into the Bitcoin algorithm that supply of Bitcoin halves. And without telling everybody my birthday, it's one of the dates that it has been scheduled to happen is my birthday in April. And so that halving will mean that we've got 12,700 demand every day, coins demand, and then only 380 odd supply being mined every day. So it's just this supply demand dynamic. And then that really does epitomize that institutional shift that we're seeing coming into the market, which is really a retail shift, right? Because what do we see? We see that investors getting access via institutions entering the market. So it's sort of a retail institutional push, but it's really those ETFs that have driven it.
Do you think this demand for the ETFs is more so because retail investors feel more secure investing in Bitcoin through these ETFs rather than directly?
Oh, absolutely, because there's just such a complexity to owning wallets and the fear of having wallets stolen, no keys, no keys, no crypto, that whole narrative. It is quite specialized, and until we get the wallet extraction right, and there's work being done on that, and until we get that right, or abstraction, I should say, until we have those wallets really safe for people, then that there is a lot of validity to leaving it to a large institution with the custody agreements. We've set up a Bitcoin in an ETF in Australia for the Bitcoin. There's a whole lot of complexities around custodian and institutional quality custodians. That's something that DigitalX, that's our bread and butter. However, that is a highly specialized skill, and it just makes sense for mums and dads. I met with an investor yesterday who's also a shareholder, and that people just don't need to have keys in safes and all of that security, right? And if that's why you have a bank, so you don't have to have your money under your bed. Same thing. You use an institution because you don't want to have your crypto keys under your bed. Same thing.
And speaking of Bitcoin ETFs, how is the Digital X Bitcoin ETF coming along?
Well, it's a lot of work, and the work is really progressing. And then that we're just liaising with the ASX, and I believe that will involve ASIC as well, to make sure that we dot every I and cross every T. And we think we've put together a really great offering. We've got a lot of experience, and then we've partnered with others who have experience as well, like K2 and 3IQ. So that's sort of trifecta of that experience, if you like. We think we've put forward a really great offering, and are very hopeful of a positive outcome.
Okay. And if it is a positive outcome, do you think we can, fingers crossed, expect it to be available on the ASX perhaps by mid-year?
Oh, I don't think I'm allowed to say. I would be really hopeful that that would be a time frame like that. Yes.
Okay.
And none of us like to get egg on our face, so I might just like wiggle around that one. And
Okay.
but what I can say is that the actual product, we might be able to do a soft launch of a retail product, because that wouldn't be traded on the ASX. But for those who may want to go earlier, we're working hard on exploring, because we've got the retail license set up, and that's
Yeah.
really the piece. So what that looks like, in terms with the partners that we have, to do a soft launch for anyone who wants to go early. And again, that's sort of, an unknown unknown.
Okay. And I know the cap raise has ended. Was the result, what you expected, and how much of those funds have been allocated
Uh,
already?
Yeah, so well, really it was working capital. So we were pleased with the result. Really, the intention from the board and I was to, well, not sell any more Bitcoin. And I think that, we heard that from investors loud and clear. And so without saying we won't ever sell another Bitcoin, because we do trade in the fund, so I can't say things like that. We obviously are the investors in both funds, and there was a very clear message to keep those investments. And I agree with that. So we're really pleased with the sort of length and depth and breadth of shareholders that supported. And that's what we really wanted, because as shareholders hadn't had an opportunity to participate in a capital raise since 2018. So from my point of view, I was really excited by the number of people and just the level of engagement, because obviously it's almost the 2-year anniversary of me taking this role. And, that's the bit that I really love, is talking to people. And, I love doing the work as well. I love building the products. And, really what we want is to make these new markets, make Web3 finance, crypto, all of these things that sound so complicated, make them accessible for everybody. That's our purpose, because there are so many benefits to, Bitcoin is the beginning. I'll say that over and over again. And I'm really excited that people are starting to appreciate the shift that it can bring to financial rails. But asset tokenization and investing in the underlying infrastructure of that through crypto is really important. It allows how we issue financial products, how we transact financially, how we spend money to fundamentally change. And our purpose is to, we believe it will have a positive social impact, and our purpose is to deliver that to individuals. And, we work very hard for that. So I was really excited at the depth and the breadth of investors that are supporting us. And thank you to everybody on this call that did as well.
Hmm. And I know we always talk about Bitcoin, and everyone that knows about crypto knows about Bitcoin. But what are your thoughts on the other coins, other than Bitcoin and Ethereum, that are always so largely talked about?
Oh my goodness, so much. We could do a whole webinar on that. So inside of the crypto fund, which is obviously not a huge amount of what we do, but it will grow and grow and grow. We curate a portfolio of crypto investments that we believe are the tokens that will benefit from this transition to a Web3 economy and create great returns for investors. And there are so many great themes coming through. They all sound so geeky, but it's just this really brave new world of what slows down asset tokenization is this moving of data from off-chain to on-chain and validating that data. There's all these great technologies around what's called as a zero knowledge proof. So we have investments in that. There's this intersectionality between AI and blockchain, which we do in a lot of our own dev work. Like we build our own algorithms to invest in the crypto fund and the real world asset tokenization fund. We combine generative AI with blockchain, and there's a whole lot of opportunities out there in that space, and we invest in those. So actually, like, our team is so passionate about that. And you can really see how these new financial rails come to life when you're investing in those. And the example that I use a lot is, I've got my Apple phone with me now. In Sydney, I obviously have a number of phones for my crypto keys, and I have a Solana phone. And the example that I use is right now when I double click and pay to get on a bus with my credit card on my Apple phone, Apple's charging 0.15%. For every single one of us, every time we do that transaction. Now, that's $1 trillion company. If when I do it on my Solana phone, the fundamental financial rail of Web3 is this messaging that gets validated. And that when we talk about validation, it's like Lisa says she'll pay the bus accepts the payment, that is validated. So instead of me paying Apple 0.15%, that's actually a person staking and validating that rail. And so a human being that set up a business gets to receive that money. So it's a total democratization of how finance works. And when you bring it right back down to every cent that you spend is actually that is money that's going into a financial system, not necessarily for your benefit, for profit for banks. And that's okay because they have to make money. They employ people. I was at NAB, we're one of Australia's largest employers, incredibly proud of that. However, what happens is there's layers and layers and layers of fees. So it's not just Apple that you pay. It's then the bank might absorb that, but they're charging you for your credit card. Then there's the machine that's sitting there. And then there's a fee that goes from the bank to the bus driver or the bus. And, just those fees really add up. If you can get that atomic settlement, which is those messages going through straight away, that's it. That's done. And then there's no layers of fees. It's much more transparent and I think will bring great savings to people. And we all need to save money right now. And when you invest, sorry, that was more than what you bargained for, but when you invest in crypto, that's what we see, right? All these thematics and, every chain we invest in has a purpose. Every token we own has a purpose aligned to that. And really the way we've started to look at it is like freeing finance because you're just removing all these fees. And I appreciate that kind of has a double meaning, but it really does have a double meaning, right? Because as a fund manager now, we're charging fees. And in the future, there's a reality that we see, and we're very, we have managed investment schemes, but there's a future in the innovation of the innovation inside the digital asset reference token fund, where we can actually share any staking revenue with investors rather than charging them fees. So you can just flip the table on how the financial equation works. And then the thing that I love about the heart that is the housing asset reference token is that when we're bigger, we can actually buy the whole houses for people, and you might never have to have a mortgage and still get to own your house, and you can buy back the house brick by brick by brick from us with a lot lower fee rate, and we'll be very transparent. And we've just got to go on that journey to get there. But that's the future that we see, and we really see that freeing up finance and allowing for people to have that advantage back, because it's so hard to buy a house and do all of the little things. Because I know I experience it myself. Every time you think you're sort of getting a bit ahead, then you've got to pay the ATO, or there's a bill you weren't expecting. And really we think and see that the future is much more transparent, which will mean that everybody will actually have a little bit more in their pocket. And that's what it's all about.
I didn't even know that Apple was charging that fee. So
I know.
thank you so much.
It's unbelievable. And actually that was one of everyone has epiphanies, and it wasn't that long ago for me. It was maybe a year and a half ago. And that was when I bought my Solana phone, because before that I was like, why would Solana have a phone? The world doesn't need another phone. That's not why blockchain was invented. And then I read an article about that 0.15 Apple phone. I was like, oh my God. And I rushed off to buy this Solana phone to support them, because the Solana phone's gone nuts now, but it really struggled in the beginning. And I was like, no, I need to be a supporter of this, because this is actually what's going to make the difference. So, everyone has their sort of realizations in waves. And I think for lots of Australians, it will take us being successful in that housing offering and growing it. At the moment, it's very small, and then we can get bigger, and that will actually be meaningful for people. And then I think they'll start to work backwards in their financial lives and go, okay, well, my home loan payment is not a home loan payment. Every month I'm either renting the bit I don't own and paying for the little bit like a P&I payment. You just get back what you can. Our investors will still need to make money. That's otherwise people won't give us investment. And then they'll start to see, oh, and actually I paid for that with a stable coin. If I got paid in stable coin or Bitcoin or ETH, then actually I have no fees. Then you start to see it makes sense just on that really visceral level. Oh, and I'm going to use my phone, my crypto to pay for things. And I will not pay for Bitcoin in stuff, I promise, for DigitalX, but I still do it PA because I buy them, all the time. And it's just like you start to get that realization that you can live in this sort of lower fee world. And if you are paying a fee, which is the transaction fee, your eyes wide open, I'm transacting, and actually somebody who's running that network receives that money, and I know that network, and I'm happy to pay that money rather than the fees going into black holes of, and it's no offense to Apple. I love Apple. I think they'll have their own network and we'll pay them in a different way anyway. But it's just that invisibility, right, that has to stop.
And how does this intersect with banks in a system where, like, for example, with the housing example, right? If we're paying with crypto, what happens to mortgages?
Yeah, well, I mean, that's interesting because for the original bricklets that we have, we partner with a bank. So,
Okay.
and coming from the inside of a bank, it really was the strategies that we were writing for them is just this same but different. So it's almost inside of a bank. It's an operational efficiency.
Right.
So at the moment, the payment rails in Australia, the MPP, are really good. So a lot of banks don't feel like we need faster payments. But in terms of these high value, low volume transactions, like buying a house, streamlining that purchase for one, the bank has to do a lot of work when you buy a house. That's operational efficiency. They'll love it.
Mm.
Because instead of getting these mountains of
Yeah.
paperwork at the beginning, if they're a stakeholder and they're part of it, then it'll be a digital transaction, heaps less work for them. And then in terms of their model, there's no reason why they have to fund that house via a mortgage. These omnibus structures, which is how we set it up in the fund, they can be set up by financial institutions. And I think you'll just see a reshaping, which will give advantage back to people. And the banks will be able to share that value because it will actually be cheaper for them to transact.
Yeah.
So I don't think that they're going to get disintermediated. I think their business model will be changed, and that's business. And then just by definition of that operational improvement, you'll get your better experience as an individual because you won't have a mortgage, and that's, to not be in that debt is just such a psychological thing for people to have debt hanging over their heads. We won't even know ourselves. It gives people access, and I think banks will still be able to make the money. At DigitalX, we're not trying to take down banks where there's so many layers of finance, and we're really in that investment layer, and we think we can make great returns for people.
That sounds so exciting.
Oh, we're
Um,
excited here every day, and we work very hard, but
and do you have anything else, any updates for what investors can expect over the coming months for DCC?
Look, we're just shoulder to the grindstone, really, and we're hoping we're sort of beholden to dates that we can't control.
Hmm.
But what we're going to be doing a lot more of this quarter is we're really building our education piece so that we can partner with individuals on their crypto journeys and point them in the right direction, and make sure the website has a lot more of that on there. So watch this space for that. And then in June, July, we turn 10. So there's going to
Wow.
be a lot of exciting activity around that. We really want to ramp up that education piece. And maybe even partnering with you, we'll do some live town halls in different, I'm in Perth right now because that's where the head office is, Sydney, Perth, Melbourne, to really elevate that engagement and invite people to come along, and we'll probably have some interesting people come and speak about crypto and Bitcoin. I don't think we can find Satoshi, but we might be able to find some other experts for people just to come along and have some. We'll do it on a weekend in the States so that everyone can just come on a Saturday and chill out with us and learn about this space. And so we're excited about turning 10. It's a great year to turn 10 with the Bitcoin fund at number 1 and the crypto fund at number 3. And, we're starting to get traction on the story of real world asset tokenization to bring that benefit to people. And so it'll be exciting to be able to tell those stories and meet people.
This is such an exciting year for all of you. I can't wait. Hopefully, I'll get an invite at the 10-year party.
I think you might, Caitlin. And someone said to me, sorry, you can't see my t-shirt because of the way I got my laptop set up. But someone said, are you going to change your logo to XI next year when you're 11? I was like, oh my gosh. So maybe. I don't think we can change our company name every year though.
All right. Well, thank you so much, Lisa, for joining me today. And thank you for everyone that's watching. As always, we'll put this recording up on YouTube, but I'm sure that we'll speak to Lisa very soon.
Thanks, Caitlin. Thanks, everybody.
Thank you. Bye.